What is up, YouTube? We're recording in the dark now. Hi, how are you doing? We had a successful trade last night, and I neglected to, before starting recording and actually getting onto the chart, we neglected to find out how to partially enter and partially exit the market, right? Because let's say you don't have exactly $20,000 or whatever it is to buy the one share you need. I'd like to be able to still enter the market with the small amount of money I do have. So even when I am at my level, I can still invest and make some capital off of my investment. From there, that's what I'm going to do. I'm going to speed run. I'm going to do my best to speed run what I can of the market. Let's go ahead and mark out session opens. Let's go ahead and pull up our notepad just because I need to open my browser. This one, this one, this. Good. We have. Let's go ahead and do that. Boom. So we have Asian session at 20, London session at 4, New York session at 8. Pre-market for Asian session is 8:30. So that's what we'll do first. We'll go ahead and mark out, not on the 1 minute, but the 30 minute. We'll go ahead and mark out. Boom, 8:30 there. That is our market. We'll mark out 9:50 as well. We gotta go down to the 5 minute because we can't see it any other way. 9:50 is our go ahead. Good. Gold. This. Asian session is 4. Or no, I'm sorry, it's 20. Huh? Hot dog. 20. 4 is London session. So London session 4. Boom. And then we'll go ahead and mark out Asian session. I gotta remember this is on the 5 minutes, so it's gonna be spread out like crazy. That looks a little bit more accurate right here. This being London session, that's way more accurate. I'm gonna throw on 20 now. I need to do this, not that. Neat. 20. Boom. Asian session, London, New York. Yeah, New York pre-market, and then 9:50 right here. This, I know that says 9:30 down low. Ignore that. It's 9:50 on the 5 minute. We're gonna go ahead and mark out session highs and lows. Get our key levels together. This is Asian session high. Boom. This is Asian session low right here. Boom. We'll mark out London session high. I think this right here is about as high as it goes. Good. And we are at London session low here. Boom. Do we care about Asian session? No. Why? Because we've already crossed it. And do we care about this high? Yes. Why? Because that could be a draw on liquidity. As you can see, this is, we apparently entered an exit here, right? That was a mistake on our part. We have NASDAQ stuff set up. Boom. Let's go ahead and mark out stuff on the S&P. Before we forget, this is the 5 minute. Let's go up to the 30 minute just to speed things up. Boom. We'll start with Asian session at 20. Boom. We're going to go to 4 for London. Boom. What did I do? I did 8:30. Yeah, 8:30. Boom. 30 minute. This. 8:30. Boom. And then gotta go down to the 5 minute and do 9:50 right there. Boom. This is going to be our that good. All right, now we'll mark out session highs and lows. Let's go back up to the 30, get it out the way. Boom, boom. Good. This Asian session high. Boom. Low. Actually, we had a cross here. Actually, how do you identify a low? Down, up first. So this right here would be our low. Boom. Or we might be about to cross that out either way. Not Asian session. London session high. Right here. Boom. How do I identify a low? Down, up. Right now, this is the lowest point. If we wanted to, we could mark this low right here, I think. I think that's an accurate statement. We can mark that because it is the lowest point price got. Do we care about Asian session low? No. Why? Because we crossed it. How many times? 1, 2. Technically, this wasn't the low. This was. With that being the case, we have our marks taken care of. Looks like we just hit a inverse fair value gap, which means I believe price is going to continue to go down. So we're looking to take a short position based on that inverse fair value gap per the London session. It's not an inverse fair value gap yet because it has yet to close above that fair value gap. Let's go ahead and queue up our handy dandy resource tool off to the side here. We're going to go ahead and mark draws on liquidity, down, up, boom. We can use that one there. Down, up, boom. We can pick that one there, boom. Down, up. You pick this one here, boom. Down, up. We can pick this one all the way down here. That is the thought process. I don't believe, but that's roughly the same one. So we'll just go ahead and do that right there. Keep that nice and simple. So we're looking to take a short position on this via this right here, this inverse for value gap. Inverse for value gap is any gap that's closed above by a green candle. That automatically makes it a inverse for value gap. We are currently on a retrace for the 30-minute. Let's see if the NASDAQ is doing the exact same thing. Yes, it is. We do not have an inverse for value gap, so we're looking at a little bit of an SMT divergence per that confluence. We're going to go ahead and run over here. Looks like, yeah, we have an SMT divergence right here between these two candles. The NASDAQ says we are going to continue going down alongside the confirmed inverse for value gap, right? We have the same inverse for value gap, except the S&P says, no, we're not going as far down. S&P is lagging behind the NASDAQ. We're going to go ahead and take our trade on the S&P for the day. Again, we're not going to wait. We are going to wait because that's our strategy is to, guess what? Wait for a price to hit key levels. Boom. What's our key level? Let's go ahead and actually find that right quick. That would be our most recent low right here. Why did I mark this? This right here is nil. We don't bother with that. Our liquidity is like right here. This is what we were drawing off of. Boom. We can actually draw off of this one right here as well. And right there, let's go ahead and pick this one right here too. Down, up, boom. Boom. Yay. So we have our four. Yeah, we have our 4 hits. The first one being our key level here. When it hits that, we'll wait for it to come back within equilibrium, place a sell trade, and hopefully watch it plummet. That is the current strategy. That is the current gist for that. Yeah, let's go ahead and get Opera GX going on this PC right quick. I'm going to look up how to partially enter and exit a position on trading view. Gold. Partially enter and exit position on trading view. Good. So I know how to enter, right? To enter, it says, hey, I'm going to buy or sell whatever it is where this is right now. Our goal is fairly simple. We want to take the amount we enter completely off. So the resulting gist is we will have our what's it called? Oh, what is it called? So we protect our position by, one, having the amount we invested back in our pockets, while the rest of what we have is still in the market, making us money, potentially. And we'll go until we think satisfied after we hit our key levels, and then we'll exit out of the market completely after our final key levels hit. We made a mistake. We made several mistakes last trade. The first trade we took, we did not hit key level. I assumed it hit key level. We did not have an SMC divergence. It was all on the chart that, and in the video, we witnessed price do something like this right here, where the low just barely got close to this, and it rebounded off of it, and we actually got a, per this chart, a large spike. We missed out on a lot of money because I chose not to wait. We missed out on a lot. I believe we took the trade on the NASDAQ. We did right here on that candle. We missed out big time. Comment section. That is unfortunate. That's a price range of 19,935 all the way up to 20,054. That's about $100. $150, something like that. And I believe, no, it was within this hour that we took it, because it was between 9:50 and 10:30. So we got our position off of that quite well. However, we made a mistake in noting that let's go ahead and do that. Let's go ahead and do this. We made a mistake entering the market because we didn't know how to exit the market. Had a minor panic attack in the middle of that. As a result, we not only lost out on some money, but we also lost out on a fairly good trade. We'll stop at that one there. We have our key levels here we can hit. Our profit margin to hit right there. We have our key level marked out. Price needs to hit this key level in order for us to have a valid trade idea. We do have, and we do not have an inverse fair value gap on this, but we do on this here. Inverse fair value gap says yes, we're going to go down. No inverse fair value gap here. Lacking of, there's still a lack of orders, though it filled it, right? I think, yeah, we're going to continue with S&P 500 because we know price is going to go down based off of this. From the hour, we're just waiting for it to hit key level, and I'm not going to say it has yet. I don't think it has. We had a fair value gap. It did hit, but we are not within our 9:50 to 10:30 a.m. margin that we need to be. And so we are going to wait patiently. We have another, technically, 2.5 hours before we have to take another trade. Before we have the opportunity to trade. There we go. And we're like, what? 1 to hour and a half before pre-market open, when we're supposed to be it hitting our key levels and actually marking out stuff right down to the 1 minute and then taking our trade off of it. So yeah, that's currently what's going on. We do have a price range from here to here. Technically from here to here. Either price hits this key level and continues barreling down, or it hits this key level and we keep going up. We're hoping it comes back up, hits this key level within this area, so that way we have our key level hit on the, of course, pre-market hour. And then once it hits that key level, we go ahead and map out our stuff into 950, at which point we'll go ahead and narrow it completely down to the point where we are okay with taking a short position. We're going to wait for that price to barrel on through. We'll have our stop loss just above this high and our take profits 1, 2, 3, and 4. Relatively fine. Good and gold. And yeah, that is what we'll do. Go ahead and research this, get it nice and gold, because instant order placement is disabled in trading settings. Click the X to close a position, then enter the desired quantity to close in the confirmation pop-up. Initiate closing. Okay, cool. Partial close confirmation. A confirmation pop-up will appear. Check partial close in the confirmation pop-up. Enter the number of units/shares you want to close. Confirm and close. Click the green close button to execute the partial close. So, to close the position, I would be buying it back at a lower price. Or not buying it back at a lower price. It'd be because we're going for a short position, right? Our goal is to see yeah. So for a short position, we're looking for a liquidity sweep on the upside. We're looking for this key level up here to get hit. Duh. That's the whole point behind a reversal. We see that key level get hit on the 1 hour, we're on the 30 minute, so it'll hit that. Or, yeah, same thing. We'll see that get hit, and then from there, it should continue on down. For the partial close, though, when we enter our position, what I'll need to do is I'll go in, right? And I will have to designate the specific amount of shares/other that I would need in order for that to be a thing, right? At that point, I can go ahead and watch as our take profits get hit moreover and moreover. With that being said, yeah, we can just go with that. Makes sense. We have an alarm set for pre-market open. We have done pretty much what we wanted to for right now. We know we're in for a short position, and we now know how to enter the market and partially close on the market. With that being the case, and with all that information down packed, said we are where we want to be at the moment, I want to be right back. We will be right back at just before pre-market open, because this chart is delayed 10 minutes. So we'll wait for pre-market to open up. If our key level, either one of these key levels are hit before or at pre-market open, we'll take that as a confluence, and from there we'll move on with our strategy per the ABC chart. Plain and simple. I'm actually going to go ahead and notate this. So, I don't know if you can see that or not, but I am now blind. Wow. Let's go ahead and, 24, and that says 8. So 20. Do this. And York equals. Good. We'll go ahead and keep that up. Also, before I forget, because we just now did this, allow me to look for news. We have for the USD FOMC, member Williams speak. FOMC is one of the ones that we need to be avoiding. However, and I do mean this, however, it is not a red folder. It is a normal folder. It is a yellow folder. Typically, it's red folders that we avoid. On yellow folders, price could do something in our favor. As a result, we're going to wait. Patiently, we are going to wait. We got a couple red folders for the Canadian currency and one other yellow folder for the London Euro. So, yeah. We are currently golden to trade at the moment. According to news, I think we're good. We have an S&T divergence happening. It has happened right there, and I believe... Yeah, we had our S&T divergence happen here. Just I'm gonna note it, just because we had this here. Boom! It was a small one. Nonetheless, though, it was an S&T divergence, so we had from here to there. Boom! Just to mark that, notate it. What is an S&T divergence again? It is a confirmation that price is going to, of that key level hit, that it's going to keep going down. Yeah. Yeah, and we are still well within structure. We just got our new high. We're looking for a new low now. From that new low, it should not come in with this key level. If it does, we'll see a mini retrace into equilibrium. Once it hits equilibrium, we'll go ahead and bring on down. Then again, this is 30 minutes, so we're primarily looking for, again, a short. So it needs to hit the top key level for us to have a valid best opportunity to get that short in. We are an hour out from market open, pre-market open, so we are going to wait patiently. Yeah, we'll be right back. Okay, it is now 8 a.m. for those of you on my East Coast. Good morning, and for those of you on the Pacific Coast, good night. Nothing much has changed. We are an hour out from market open. We have an S&T divergence. We do, in fact, on the NASDAQ, we do not have a, what's it called? Inverse fair value gap. We have an inverse fair value gap on the S&P 500. Looking for... This may have been a liquidity sweep on the downside. I'm taking note of this now. This may have been a liquidity sweep, which means price is going to move higher. We're waiting for it to hit this key level specifically. This would have been our breaker block, order block, liquidity sweep. We also have the inverse fair value gap on the S&P. As a result, it swept that low. Same gist. So price is going to continue moving higher. We have every confluence needed on the 30-minute showing us that, yes, price is in fact going to move higher. Once it does and hits our key level, from there we will scale down. We don't want to take a trade before 950. With that being said, I do want to see what price is going to do after it's hit our high. Once it hits our key level, it'll either be a sweep or it'll be a complete break of structure to the upside. Can only be one of the two, realistically speaking. So, yeah. As far as I'm concerned right now, we are still in it for the short position. So when we enter, we're not buying, we're selling. We're selling high, buying back low. Once that is a thing, we also now know how to somewhat partial close. We know to enter one unit instead of all of what we have, right? Yeah. I'd like to see us take profit on multiple levels today. Yeah. In the event I'm wrong, no harm, no foul right now. I understand that's part of the game. I gotta know exactly when to cut my losses short and all that fun jazz. If I do wind up taking a short position, I think I'm going to put it above here. Just above our inverse fair value gap, because this will have closed and this will have guaranteed. Because on the 1 hour, I'm pretty sure this right here, from this right here down to here, this is one fair value gap. Let's just look at that right quick and make sure. Very small fair value gap, but I did, in fact, call that. This is, in fact, a fair value gap on the 1 hour. Higher time frame holds higher confluence, holds higher power. We have a very small fair value gap there as well. On the 30-minute, we closed above that on one, but it didn't on the other. We still have that SMT divergence on the hourly. You can see that here. Because on the higher time frame, we still have that fair value gap, and we actually swept that fair value gap without disrespecting it. I do strongly believe that price is going to continue moving down. You know what I'm seeing right now? I'm seeing a lack of... We are in a downtrend right now on the hourly. I'm seeing a lack of buying power in the market. I'm going to ignore what I just said. Stick to what the strategy has. I'm just going to stick to it. Because that is what has been more successful. And as a result, I'm going to adhere to it sooner than I will myself at the moment. What do I think going into this trade? I think that my current use of confluences is what's going to save me. That the fair value gap on the higher time frame is to be respected. As such, it is not an inverse fair value gap until it is closed above by a new high. And if it's closed above a new high, it'll be a complete break of structure. We'll have made a new high on the hourly. I don't see that happening as a result of this being the way it is. However, anything can happen in this short span of time here. I am entirely inclined to take a trade on the S&P 500 solely because it is lagging behind the NASDAQ as of right now. With that being said, Let's scale back down to the 30-minute, and what we're going to wait on is market open here, pre-market open specifically. We're going to look and wait for one of our key levels to get hit, and this time it should hit compared to last time. It should. Based on these confluences already laid out before us, it should very well hit one of the key levels. We might hit the key level within this candlestick, within this candle's 30 minutes, potentially. Either that, or it will, again, this is a key level, so it'll probably sweep this liquidity completely and push higher. Yeah. I'm going to play one more mission on my video game right quick. I'll pause recording, and once I'm done, I'll unpause, and we will see where we are at. BRB. Alright, comment section. We are just before market open. Not 30 minutes, but 26 minutes before pre-market open. With that being said, yeah. This is where we are. We haven't closed above or below. We have not crossed one of our key points here. I do want to mention that we have not also, we haven't messed with our high and low. I don't think there's an SMT divergence on this just yet. There is not. Okay. All right. I think it looks good for right now. So far, it's starting to look like price is going our way. Say that. I don't want to jinx it. When price hits key level, we're going to scale down to our 5-minute, look for a break of structure, inverse fair value gap, or a SMT divergence. We might actually get, we already have an SMT divergence over here, but that's for price moving up, not down. From this, I can pretty much, we're looking for a break of structure, because right now on the 5-minute, we are technically in an uptrend per this, right? When we hit this, we'll be in an uptrend. We're waiting for that break of structure back down. So we're looking for a lower high off of the 5-minute time frame. Once we have a break of structure, or because this will have created a fair value gap, we're waiting for that inverse fair value gap, so a large wick down, indicating that it is in fact going to continue down. We're going to go ahead and scale for our 5-minute continuation. So we're looking for either a fair value gap, a breaker block, order block, or an equilibrium in the event we can't find any of these three. At that point in time, we'll be looking for the 1-minute confirmation for another break of structure or an inverse fair value gap. Plain and simple. Plain in simple. Boom. We have how long? 24 minutes. That is what we've got right now. 24 minutes. I think I can step away again, and we will be right back immediately after. BRB. Okay, comment section. Looking at what we've got here, allow me to go back up to the hour here. Boom. Let me go back up to the hour here. Boom. We have not hit our key level. At least not yet. Interesting stuff, to say the least. Very interesting stuff right here. We are not within our time to trade yet. However, at the same time, this is almost exactly what happened last trade. If you guys saw that video, it should have been posted like Thursday night because the power went out like 4 times. Same thing again. We mark our session high. Here's our key point. Here's our key point. We're looking for this to touch this line and move back down, right? It has not done so. Instead, it's gotten really close, and something tells me we might have another candle out to here, and it might reach just barely up underneath it. And from there, we'll have to go ahead and act on that key price. Just because it has, in fact, closed above this what's it called? Fair value gap here. It will have, at that point, disrespected it completely. At which point, it will have become an inverse fair value gap, which is our confirmation. Actually, yeah, it's our confirmation on both the 5-minute and 1 minute. So I'm going to treat it as a confirmation confluence on the hourly. That price is going to continue in the right direction. It's going to, what's it called? Yeah, it's going to continue right back down. It's not going to inverse. It's going to straight down. From there, yeah, it would make the most sense. It would make the most sense for it to come up and sweep that most recent high on our key point right there. Yeah, it would make the most sense. We have 39 minutes before this candle right here closes. Did not realize how much time we had on this candle specifically. We have not reached our time for trade yet. That is completely fine, completely understandable. Just, I understand it. We're going to wait for this to do its thing. We have no S&T divergence on the top side, so as far as I'm concerned, we are 100% going to keep pushing higher to make that new high right there. Yeah, if we fail to meet this, I'm assuming this is going to be our breaker block. And so I will be looking for an order block I'm wrong. I'm going to assume this is going to be our order block because this right here is our breaker block. A lack of sell in the market. So we should be seeing an order block here completely filling this. All signs point to price moving higher and taking out this key level. Once it takes out this key level, we are going to continue assuming that our idea is right to trade on a short position because we are in fact in a downtrend at the moment. So without further ado, we will be right back one last time. Fingers crossed our idea is right, honestly. All right, chat. Comment section. Let's see where we're at. We have 31 minutes before this candle closes. It just closed this candle here. As you can see, it wasn't enough to create a new low. However, we're waiting on this one here to do the job. I believe that that's good. Okay, cool. I believe we're set. Honestly. I think we're good and set to go. I think we're okay. We're okay, chat. How are you doing, chat? Chat? You're not chat. I'm not streaming. This is comment section. What's up, comment section? How are you doing today? I know it's really early. It's 8:30 a.m. I've never seen the light of day ever. I've never seen the light of day. But that's because we're out here winning. So let's continue doing that. We're winning. Why stop? Right? This right here, I think we are in the right. We are going to continue moving down. Looking at the fact that we've been down for quite a while. Yeah. Interesting stuff. If we were to take, if our idea were to change for whatever reason, regardless of reason, we're going to do this. Boom. Boom. We're going to keep those marked. We'll do the same thing for NASDAQ. Just in the event we see S&T divergence on the downside, that would signal reason to target these up here. Boom. And boom. Good. We have two zones of take profit. One to the downside, one to the upside. Downside if we're in a short, upside if we're in a long. I do believe we're going to continue short, at which point we are going to put our stop loss above this high. Without a doubt. Comment section, I'm highly doubtful on what we're set up with. I want to take a short, but at the same time, I'm looking at how long we've had. Because look, we've had this right here, right? We've gone all the way up here. And in almost the same amount of time from this candle right here all the way this way, we've gone down, right? So we have an inverse fair value gap here, a large one. It's left a fair value gap for us. A double inverse fair value gap is what I see right there. What does that mean? What does it mean when we see two inverse fair value gaps? It means we have two confirmations. What does this inverse fair value gap confirm? That liquidity was swept up high and that price is going to continue down low. What does this fair value gap confirm? That price was swept right here and price is going to continue higher. So from this downtrend, we're waiting for one large candle up to hit this right here. That is going to leave us a very stark fair value gap. It's going to leave this as an inverted fair value gap. What I think was going to happen is we might sweep down low. If we sweep down low, I think it's okay to enter a buy position so long as we have a break of structure above this key level here, because this is a key level on the Asian session, right? If we have one large candle moving up, this right here, if I'm not mistaken, is going to get cleared first. From this key point right here, I'll be looking and scaling down to the 5-minute and making sure that all our confluences are followed at that point. We're not going to make as much money as if it were just to hit this right here, because if it hits this key point, right, we know it'll only sweep it and move down. But if it closes above this key point here, we're going to change our idea to an up position, and at that point it'll be a buy-in, not a sell-in. So from there, we're keeping our head about us. We're keeping the ideas open. We have a general idea. We see a downtrend. We think it's going to go into downtrend. I think it's going to continue at a downtrend. I want to see. We might actually have a break of structure before we get key level.